Hi everybody, this is Lara at Elliott Wave Gold with your end of the week video analysis for the gold cash market for the trading week ending 12th of March 2021. Upward movement this week completed another fourth wave correction which was expected, and for the short term upward movement found resistance pretty close to the upper edge of a channel that's containing recent downward movement. The first wave count remains bearish and has support from classic technical analysis. The next target is at 1645, but if that's wrong, it may not be low enough. The long-term target remains extremely bearish at 657. The second wave count remains valid, and it is bullish. It expects a new upward trend has just begun, and the target for that wave count is at 2124, and I'm going to let price tell us which of these two wave counts is correct. For now, this is the preferred wave count. It has more support from classic technical analysis. At the weekly chart level, this wave count sees a huge B wave at supercycle degree over at this high in August 2020, and a new downward trend for a C wave beginning back there. The bigger picture at the monthly chart level is of an expanded flat correction, with A off to the left of the chart, the low in December 2015 at 1046, B and C. Expanded flats are sideways movements in an ever-increasing range. There's a small example in here, although it's a little bit squished up. It's best seen at the daily chart level, A, B, C. B moves beyond the start of A, and C moves beyond the end of A. Supercycle C may only subdivide as a 5-wave impulse with cycle 1, 2, 3, 4, 5. Cycle 1 would be incomplete, and when it is done, cycle 2 may not move beyond the start of cycle 1 to a new all-time high. Cycle 1 looks like it's most likely unfolding as an impulse with an extending third wave, with a brief primary 1 and 2 and a very long extended primary 3 beginning, with intermediate 1 and 2 and an extended intermediate 3, with minor 1 and 2 and an extending minor 3. When minor 4 arrives, it may not move into minor 1 price territory. When intermediate 4 arrives, it may not move into intermediate 1 price territory, and so on down to complete cycle wave 1. Let's take a look at the daily chart level, where this high back here is this high back here. Now we're looking in more detail at this series of overlapping first and second waves, a strong downward movement for primary 1, a counter trend bounce for primary 2, an impulse for intermediate 1, a double combination for intermediate 2, an impulse for minor 1, a double zigzag for minor 2, an impulse for minute 1, a double zigzag for minute 2, and an impulse for minute 3, now possibly have moved through its middle and moving towards its end. Gold, typical of commodities, will exhibit swift, strong fifth waves, and the tendency is especially prevalent for fifth waves to end third waves 1 degree higher, and this works in both directions, bull and bear. The current downward movement is a bearish movement. It's possible that minuet 5 to end minuet 3 could be particularly swift and strong. Also, minuet 5 to end minor 3 could be particularly swift and strong, which is one reason I say if this target is wrong, it may not be low enough. Also, minor 5 to end intermediate 3 and intermediate 5 to end primary 3. Any one or more of these fifth waves are ending third waves 1 degree higher. They could be particularly swift and strong, ending with selling climaxes. For now, if minuet 4 moves higher, it may not move into wave 1 price territory above the short-term invalidation point. Minuet 4 looks like it's found resistance slightly below the upper edge of this small channel. This is an Elliott channel drawn around minuet 3. I've drawn the first trend line from the end of minuet 1 to the last low, which is minuet 3, and then placed a parallel copy up on the end of minuet 2. That will sometimes show us where a fourth wave may find resistance in a bear market or support in a bull, and it looks like it's worked fairly well in this instance. At the hourly chart level, here's the end of minuet 3. Here's a really good looking zigzag for minuet 4, finding resistance just a little bit below the channel. The daily chart is drawn on a semi-log scale, the hourly chart is drawn on an arithmetic scale, and it makes a little bit of a difference to exactly how the trend lines sit. So for these shorter term movements, I would prefer to look at both ways for the trend lines, and if one is breached, then expect resistance or support at the next way the trend line is drawn. Minuet 4s come really close to the upper edge of the channel when it's drawn on an arithmetic scale. Minuet 5 should subdivide as a motive wave structure, most likely an impulse. Subminuet 1 may be complete. Subminuet 2 looks like it may move a little higher. Price is closed so close to the high for Friday's session, so I'd expect at least a little bit more upward movement when markets open on Monday. If it gets that high, subminuet 2 should again find resistance at the upper edge of that channel, so this trend line may continue to be important for us next week. Subminuet 2 may not move beyond the start of subminuet 1 above the short-term invalidation point. We have a shorter-term target for subminuet 5 to reach equality in length with minuet 1 at 1652. Around about that point, we may see another decent-sized bounce for minute wave 4. Although I would expect bounces to be relatively brief and shallow at this point in that wave count. This is the second wave count, and I keep publishing it for a very good reason, because I want to let price tell us which of the two wave counts is correct. I've drawn an Elliott channel around this upward movement. I've drawn the first trend line from cycle 1 off to the left of the chart to cycle 3 here, and a parallel copy on the end of cycle 2. If cycle 4 breaks below the lower edge of this channel, this wave count may be discarded, but for now I'm going to leave it. If cycle 4 continues lower, it may not move into cycle wave 1 price territory. This wave count is very bullish. It considers the possibility that the bear market for gold was over in December 2015, that is possible, and that a new bull market developed there. If a bull market's developed here, there are a few problems in terms of Elliott wave structures for this wave count. They're off to the left of the chart mostly now, within cycle wave 2. Cycle wave 3 doesn't really have a problem, but cycle 4 is a not very common triple zigzag. Let's take a look at this structure at the daily chart level, where this high here is this high here. I've tried to see how this could be labelled as a single zigzag, and I keep coming to the conclusion that it has a much better fit as a triple zigzag. It fits really well actually, and the proportions are actually pretty good. First zigzag in the double has a nice triangle in here for intermediate B. The double is joined by a 3 in the opposite direction, subdividing as a zigzag. X waves almost always subdivide as zigzags. Wave Y also subdivides as a zigzag. X, another zigzag, failed to make a new swing high. It's a very deep correction, but it hasn't made a new high beyond the prior point of the prior X wave within the triple. There's no rule actually telling us how deep X waves within multiple zigzags can or should go. They can actually make new price extremes, but for the triple zigzag, or more commonly a double zigzag, to have a normal look, X waves are usually relatively brief and shallow. This one's a lot deeper than you'd expect. Another zigzag fits fairly well to the last low for a possible triple zigzag for primary X, and this could have completed a triple zigzag for cycle wave 4. If that's the case, then cycle wave 5 should have begun here. We do have a bullish engulfing candlestick pattern, but very importantly, it lacks support from volume. For a bullish candlestick reversal pattern to have confidence, it should have support from volume. That's quite important. This one doesn't, so we should not have confidence in it. At the hourly chart level, here's the possible end of cycle 4 from this low to this high. This could be minor wave 1, a brief shallow fourth wave, a more time-consuming second wave is actually a reasonably typical look for gold's impulses, so I don't have too much problem with this. I have more of a problem with the lack of support from volume here. This downward movement could be minor wave 2. This could fit as a zigzag. If it moves any lower as a double zigzag, it may not move beyond the start of minor wave 1. The confidence point is the same, because that's the point of the low of minor wave 1 within intermediate wave C. If this price point is passed to the upside, then it couldn't be a continuation of minor 4 within intermediate C, and so then we'd have confidence that intermediate C should be over. Chart level. This is a weekly candlestick chart. At this high here, this upward trend reached very extreme. ADX was both above 45 and above both its directional lines. RSI reached overbought and there exhibited double bearish divergence. Within those conditions, we then see two big bearish candlestick patterns at the weekly chart level, a shooting star and a bearish engulfing candlestick pattern, which importantly had support from volume. For a bearish candlestick pattern, it's not necessary for it to have support from volume. That's more important for bullish moves because price can fall of its own weight in a bear market. But when you see a bearish candlestick pattern that does have support from volume, that is more impressive. So this is pretty impressive. And so this suggests that we needed to take it seriously, a possible trend change. So it's unsurprising we're getting some downward movement. The question is, how low is it going to go? Within the last upward trend, here's the last minor swing low. This week, importantly, price has not managed to make a new swing low below this point. This is the week beginning, I think, 1st of June within 2020. Price has found support and bounced up there. If price does make a new low below this point, that would be bearish. This is an upward trend, a series of higher highs and higher lows, the basic definition of an upward trend. From here, we've got a series of lower highs and lower lows. If we get a new swing low below this point, then that breaks this pattern of higher highs and higher lows, because then we get a lower low. And so that would be quite bearish, and it would offer quite a lot of support to that first Elliott wave count if that happens. But so far, it has not happened. Downward movement this week, it closes green and it lacks support from volume. The last signal given by on-balance volume was a break below support and may be coming up to test resistance. This may assist to halt a rise in price. ADX is indicating a downward trend in an early stage at the weekly chart level. This is a very strong bearish signal from ADX supporting the first Elliott wave count. ATR is overall flat as price falls. I have no concerns for that in terms of the first Elliott wave count. Gold will often start its trends relatively slowly. To see what I mean, have a look at price action for the, I think, 2 or 3 years after the September 2011 high, and see how choppy and overlapping that was and how ATR was essentially flat, I believe. RSI is in neutral territory still. Stochastics oversold and MACD bearish. When this market trends, stochastics can remain oversold for a fair while because ADX indicates a trend. We don't use stochastics, we use RSI, so there's still room for price to fall at the weekly chart level before RSI reaches extreme and ADX is nowhere near extreme. There's a long way for this trend at this time frame to go. However, at the shorter time frame, things are becoming a little bit more extreme. RSI did reach oversold. We've had a little bounce this week, which has relieved that from extreme conditions. ADX is extreme. It's above both DX lines. It's not quite at 45 yet though, so there is still some room for the downward trend to continue. For this particular market, ADX can reach very extreme. It can reach up to 45. And then, but shortly after, you would expect a reasonable reversal or consolidation to relieve extreme conditions. So we're getting closer to that expectation. Thursday's session completes with a bearish long upper wick. Friday, a long-legged doji. Doji can occur within downward trends. They're a little pause within a downward trend. It's not of a concern within a downward trend like it is within an upward trend, and so no concern with that for Friday's session. Downward movement for Friday does have a little push from volume. We've been over RSI and ADX. And at the daily chart level, stochastics is back up from oversold. It's in neutral territory. We get a bullish crossover for MACD, but I'm not going to give that much weight. Week with your gold analysis. I hope all of our members are having a fabulous weekend.